Financial Services joining us, and Devang Mehta from Spark Capital Private Wealth joining us as well. Shivangi, on charts, how's the Nifty looking? I'll come to you in just a minute from now, Devang. But first, Shivangi.
We've seen that Nifty has seen a good amount of rally and strength building over here. Of course, thanks to the NBFCs, which have contributed well. Now, it is again struggling to cross 24,000 levels, but a good amount of longs are being carried over for the day. Overall, we're expecting this momentum to continue. India VIX is also supporting the bulls, and we're looking at 24,200 immediately, and with a support of 23,850 marks. So buy and decline to continue over here.
Okay, buy on decline is the word coming in from Shivangi. Devang, hi, good afternoon. Let's get your view in as well. How are you looking at the market right now? The last couple of days have been positive after we've got the indication that the deal might be signed soon between US and Iran. And today the expiry seems to have no pressure on the market. In the near to medium term, if all goes well and the ceasefire holds, where are you seeing the markets?
Thanks for having me on the show. Pleasure to be on it now. I think, yes, very clearly, we generally have been in the camp which has been a little more bullish on the market after 1 year and around 9 months of severe, I can say, price correction, time correction, and also valuation consolidation, if I can use that word. That is, the market has gone through the grind. And of course, probably the last 7-8 months, if I can say, India was more a macro trade. But since the war broke out, India become more a micro trade, right? So what has happened in the last, even in the last quarter, is that market is always a slave of earnings, and the earnings came out to be very well. Be it large caps, particularly, be it mid cap and small cap. I think the bulk of the earnings, where I think the good earnings came, was more of mid caps and small caps. I think broader markets also came and participated. I think probably April and May have been very good months where FIIs have still been absent. We know that the last 2.5, 3 years, last two years, I think they've just been selling. So my sense here, with macros being decent, the last 2-3 days, the events which have turned out, which probably are now turning the headwinds that India had into tailwinds, with crude falling, with probably, I think, a lot of talk about even the foreign portfolio investors now probably wanting to come back to India. I think that there are green shoots which are right now showing probably the risk to reward right now with looking at macros, earnings. I'm not even discussing P re-rating at this point. I think it's quite positive. So to me, the risk reward is probably, the risk should be 20 and reward should be 80 if somebody has a medium 1 to 2 year horizons also.
All right. So favorable per se. What we'll do is slip into a very short break, continue conversation with the panel that we have on the other side. Stay with us. One plate, is there a trade out there?
Definitely, this entire space has been buzzing a lot. On my radar has been, of course, CG Power, which has consistently moved. And we've seen that the move has been, although slow and gradual, but from the 11 weeks, it has been trading in an upward sloping channel. RSI is still showing positive signs over here. And the good part is that the stock is near its previous hurdle zones, and it is comfortably trading above it of 938 level. So definitely a stock to watch out over here. The next targets that we're looking out for CG Power is 980 odd levels with a support of 920 zone.
Okay, those are some of the levels to watch out for on CG Power. Speaking of power, renewable, and the summer this time has been so intense that power demand has shot up to fresh highs that we've not seen in a very long time. Devang, how are you looking to play the power theme? Anything that looks good within that basket of stocks?
I think, yes, we have been advocates of power ancillaries, and in fact, we have been one of the early buyers in the market. I'm not recommending any stocks here, but the HVDC theme, which converts all this high voltage direct current type of companies, power automation type of companies like Hitachi Energy, GE Vernova, GE T&D. this type of companies or Siemens Energy. I think these are companies which facilitate more of, I think, the power renewables in India and a lot of other ancillaries as well. So my sense that somebody directly taking exposure to direct power companies or state electricity board type of companies or power producers should rather look at this ancillary type of theme. And I think there are many companies down this. If you look at, there are engineering type of companies, there are manufacturing type of companies who make ancillaries for such companies, and they get job work from the companies who are above the ladder. I think that this is the theme, the proxy play. If somebody plays it very well, I think the entire capex power infrastructure type of theme should do very well from here on as well.
Interesting. Anything within energy that's looking good to you, Kunal?
See, I think power as a space overall is something which has done very well. Especially I think post the special situation for Trent, the stock has made a very good comeback. It's almost like a 20-25% up move for the stock from a price adjusted, which was 4,000, sub 4,000, to now at 2,900 thereabouts, where it's trading right now, adjusted to the prices. So I think it's done fabulously well in the last, I think, 2-3 months. Compare this with the likes of VMart. The stock has moved from 100 levels in March, 102 levels in March 2026 towards 115-16, where it's trading right now. So many of the stocks have recovered from their lows, but then to call in for a big price uptrend, there has to be a stronger price structure or at least a strong volume structure. That seems to be missing for many of the stocks. So I think that aspect, Trent is the only name which I would probably spot looks attractive at the current juncture.
Okay. IT, Devang, and this entire tie-up of HCL Tech with Sarvam, what's the view there?
I think this tie-up augurs very well. However, if you ask me, if we have been positive on the IT space, we have generally been negative for the last 3 years, and we continue to hold that stand. Honestly, from here on, can there be 10%, 12% type of CAGR being made on the frontline stocks or the IT services businesses? Yes, very well possible. But somebody who probably wants to maybe generate some alpha over the index, maybe if the index returns, say 14-15% over the next 3-4 years, somebody who is hunting for spaces above, say 17-18% type of returns, ideally the IT pack wouldn't do that. There are a lot of financials, there are a lot of capex related companies, a lot of consumption companies you were talking about earlier. I think they should make the cut towards that above 15% type of return. So IT, as I said, there are still headwinds. There is no clarity. Yes, of course, there has been huge valuation correction and price correction. All these companies are at, if I'm not wrong, multi-year lows. So yes, probably there can be bounce backs for some of them. But if you ask me, HCL Tech today, particularly the deal that has happened, it augurs very well in the medium term. But as I said, the long term, a lot of these business models need to change. How they adopt to the digitization, how they adopt to AI is again something which the street wants to monitor.
It's a wait and watch game when it comes to IT. Shivangi, we've only got a couple of minutes till we wrap down for the day. What would be your outlook for the Nifty and Nifty Bank for the rest of the week, given that geopolitical cues are now positive, and also today's Nifty expiry has not been able to add any pressure to the market? We continue to be quite stable with a gain of about 0.5%. In the near term, where are you seeing the Nifty headed now?
Absolutely. We've seen that the bulls are strengthening at this point. Now, Nifty next, I'm looking at 24,200 on an immediate basis. Although 24,000 will be an important level to watch out, there is a psychological, call writers present at the higher strikes, but this level would be important with a support of 23,850 marks. And for Bank Nifty, I am looking at the next upside levels of around about 57,750 levels immediately, and then 58,000 zones, with a near-term support at 57,000 levels.
And HCL Tech in particular, Shivangi, curious to know what the view there is.
So, Harsh, if I look at HCL Tech, this stock hasn't performed, probably from the last 4 odd months. And we've seen that the stock has absolutely been in a very lackluster move. In fact, if we have to look at the IT space, then I would look at Coforge. But on the whole, this sector is a little bit of a slow mover. As of now, one could look at NBFCs and the financial space stocks.
Okay, Shivangi, as well as Devang, thank you so much for joining us this afternoon. We'll let you go. Kunal, stay with us. Sneh, over to you.
Yes.